Hey, Moby Trades! I want to do a video analysis update of the stock market. We'll talk about the S&P, as well as the Dow, the Nasdaq, and SOXX, Microsoft, Apple, and XLY, Amazon, Nike, BAC, and Nvidia, Micron for Solar, Enphase Energy, and Tesla, NEO, UEC, and EPD, Delta Airlines and Royal Caribbean, Twitter, Snapchat, and Roku, Bitcoin, Novavax, Ethereum, Ethereum Classic, Ripple, and Solana. So we'll start with SPY. I just wanted to refresh it for a while. I had that SPY was forming a wave 1 and a wave 2. This was a wave 3 and an ABC correction that was going to end wave 4, where the length of wave A placed the wave B high is where wave C ended. What we've seen and what I'm about to go over is that for a lot of ETFs and stocks in the market, they've already gotten down to the 61.8% fib. They look like they're ending wave 2. So there was a more conservative view of the S&P that said this was a wave 1 and a wave 2, this was a wave 3 and a wave 4. The more conservative view was that this was going to be a wave 5 to the upside, where the length of wave 3 placed at the wave 4 low was going to take the S&P up into the 520s. So what we've seen for a lot of stocks and ETFs that I'm about to go over is that what's more likely is that this is all a wave 1 that is developed from the March 2020 low, and this is the wave 2 that we're ending right now. So if we look at the weekly RSI, we can see that the highest reading it has made within the cycle from the March 2020 low is 73.49. So if SPY starts to rally, to new all-time highs in the big picture, into the 500s, and we see the weekly RSI has gone above 73.50, it's at 75, it's at 76, it's going to confirm that this is not a wave 5 in progress, and I don't think it is. I think that this is all a wave 1 and a wave 2, so above 350, I'm looking for a wave 3 to develop, and that's going to take SPY not the length of this rally placed at this low, but I think that this is all a wave 1 from the March 2020 low. In the big picture, we can see it replicated for wave 3, and that can take SPY up into the 600s. Now, I know we just had a big week or whatever, right? I've got a YouTube channel. I'm talking about SPY going to the 600s. So first, let me say, we're about to get into a lot of less sexy ETFs than SPY. But first, at the end of this week or at the end of this trading day, I bought a straddle on the Metaverse ETF METV, where I bought the 9 call that expires in February of 2023 for $105, and I bought the 9 put for $95. So the total lot size is $200. So that's an example of how I'll buy a straddle to kind of lock in, a position in the market. It's called a long gamma delta neutral position. So I can make money if the Metaverse ETF METV goes down, but I can also make money if the Metaverse ETF goes to the upside. And that's what I'm expecting. So that's an example of how I'll take, a delta neutral position, buy a straddle, and that'll help hedge, in this case, some of my big tech related holdings. So I do think we're going to see SPY hold above the 350s. We're going to see in the big picture, it go make new highs, and I'm going to look for the RSI, and what I expect is that the weekly RSI will get above 73.50. So I want to make sure we get into a lot of ETFs besides just SPY. Here's the Dow Jones ETF DIA. I think this is a 1, 2, 3, 4, 5 waves impulse. So it's 5 waves up and 3 waves back. What I'm expecting, we've already seen, there's places to look, but we've already seen some stocks that participate in this ABC correction with the indices go make a new high. One example that I think is about to do it is a REIT called Main Street Capital. There's a few other examples that are a little more obscure. I think Enphase Energy breaking to a new all-time high. We'll get into that later. But what I think we're going to see is that the Dow Jones is going to make a new high. And what that means is this is 1, 2, 3, 4, 5 waves up. Whether or not this is wave 1 or wave A, and whether or not this ABC correction is a wave 2 or a wave B, I'm looking for a wave 3/wave C to be the length of this rally placed at this low. So 275 is a little wide, pretty tight. If it's just say that's the June low is going to hold, that 296 would be a little tighter. But I think 275 is still a little more meaningful, a little more wide, and I'm expecting the Dow Jones is going to go make a new high and create an incomplete bullish sequence where this equal X target in the big picture, in the long term, is going to take the Dow up into the 480s. So I'm just trying to get what the big picture view is, understand the bull argument. It's always important to understand the bear argument as well. But right now, we'll get into why I favor the bull argument. I think this is a wave 1 and a wave 2. For the Qs, in the next 3 stocks we're going to go over are very similar, and I want to go over them, make sure that the levels are clear, because I'm going to say a slightly different view for Apple. So just have that in mind. I think this is a wave 1 and a wave 2 for the Qs, and all these next 3 cycles are from the 2018 low. Wave 1 and wave 2, I think this is the big wave 3 for the Qs. Now what it looks like we're getting is an ABC correction where we're turning around at the 50 to 61.8% fib. I think we're going to hold this wave 1 high of 229. So that's a little wide. 258 is a little tighter. I think we're going to see the Qs go on a wave 5. So if wave 5 in LA wave theory is either the length of wave 1 or the length of wave 3, places the wave 4 low. If it's the length of wave 1 places the wave 4 low, we wouldn't see the Qs make a new all-time high. I think that this wave 5 is going to be the length of wave 3 places the wave 4 low. And that's going to take the Nasdaq up into, in the big picture, that big round number of 500. So I like that. Above 258 is a little tight. A little further is 229. This 2018 high SOXX is similar view. I think this is a wave 1 and a wave 2, a wave 3, and an ABC correction ending wave 4 at the 50 to 61.8% fib. Again, I expect we're going to hold above this wave 1 high of about 269, which is a little wide. The 61.8% fib of 322 is pretty tight. But I think we're going to see a wave 5 higher where the length of wave 3 places the wave 4 low in the big picture, takes SOXX up to 700. So we do have this wave 5 view occurring across the market. One thing I'll add about SOXX in the big picture is that we've seen that this is the highest monthly RSI reading on the all-time chart for SOXX. So I think that helps to confirm this is not a large wave 5 that ended. I think it's just giving a little bit of evidence that we're going to see new highs in the semiconductor sector. We'll talk about some examples in a little bit. Here's Microsoft. It's another one from the 2018 low, a wave 1 and a wave 2, a wave 3, and a wave 4 that's ending at the 50% fib. I think the length of wave 3 places the wave 4 low above the 61.8% fib of 215 can take Microsoft on a wave 5 higher again that replicates this rally from the 2020 low to the November high, and we can see Microsoft in the long term go up into even the 400s, the mid 400s, even the 450s. So, you know, there are kind of melt-up views developing. We'll talk about where we actually could have gotten some evidence for the bulls kind of around the market. Let's talk about Apple. I think that Apple's cycle starts from the September 2020 low. So it's important to note for Apple that even if we did talk about a similar view we just done, where from the 2018 low, it's wave 1 and wave 2. This is wave 3 and wave 4, and we're looking for a big wave 5 higher. It's still a pretty substantial price target like the other stocks I just went over. I want to talk about a slightly different view with Apple, where the cycle occurs from the September 2020 low. I think this is 1, 2, 3, 4, 5, wave 1 for Apple, and an ABC correction, wave 2 at the 61.8 to 78.6% fib. I think Apple's within a wave 3 right now. They can take it up into the 190s, and we can see Apple possibly go higher than the 190s for waves 3, 4, and 5. I think the best view of Apple comes from the 3 charts that were just gone over. I think that other Nasdaq names like Tesla and Nvidia and Amazon are also really good evidence. One thing I'll talk about with Apple and that I like to talk about is on the bar chart, straddle, and strangle screener at each of these dips in 2020 and 2021. We're seeing Apple on the top of the bar chart, straddle screener with a lot of tech stocks that we've seen, you know, for the past couple of weeks, where the institutions are buying delta neutral straddles, kind of like the one that I shared about the Metaverse ETF at the beginning of the video. We can see Apple and Pfizer. Watch for news from Pfizer. I think we're going to see a lot of news from Pfizer, and that's not my opinion. That's the options market's opinion, because they bought some straddles on Pfizer. It looks like Apple, Amazon, and Micron. This isn't the magic screener, but this is the screener to find stocks that are going to have a big move objectively, and then technical analysis can help develop the bias. But what's important to understand, and what I'll kind of push my channel into in the future, is that, you know, there's a big aspect of the market that's directionless, that's based on the Greeks alone. And it's not, you know, I've noticed that a lot of people have gotten attracted to the idea of becoming a quant, you know, trading the Greeks and being delta neutral, right? And so that's actually something that I've been working on for the past year and a half, 2 years, and I'm excited about some of the results. But understanding that a directionless game is going on behind the scenes is really important. I think, you know, just recently I saw Next Area Energy and Plug Power, you know, on the bar chart straddle and strangle screener, you know, and I was like, Next Area Energy. I look at the bar chart straddle and strangle screener every day. I've seen Next Area Energy on it, you know, 3 times in the past, you know, year and a half. And then just this week, I saw Next Area Energy is on it, you know, 4 or 5 times. I'm like, okay, why is this, you know, clean energy utilities, you know, kind of obscure stock all over the screener? And then lo and behold, we get these big surprises from the clean energy sector. Anyway, here's XOY. Watch for some surprises from Pfizer. That's all I'm saying. And Apple and Amazon. That doesn't mean they're all going to be to the upside, but what you'll notice when you start paying attention to the bar chart straddle and strangle screener is that all of a sudden news starts popping up, a la oil in the first quarter, right? Oil, you know, no one cares about oil. It's all over these screeners. And then, you know, surprise, surprise. Here's XLY. I think this is a wave 1 and an ABC wave 2 at the 61.8% fib. The length of wave 1 places wave 2 low. This beautiful ABC correction. It looks just like Nike, just like Starbucks. I think very similar, slightly different than Amazon, but I think we're going to see XLY enter a wave 3, or it's in with wave 3 right now. And that equal-legs target for wave 3 is the 260. So I'll get going through some of these. Here is Amazon. I think from the 2018 low, it's another one. 1, 2, 3, 4, 5 waves up. ABC correction at the 61.8% retracement. The length of wave 1 places the wave 2 low. Can take Amazon up to 225 before a shallow wave 4 and a wave 5 high. I know these targets sound high. These are in the big picture, okay? And when we start seeing, we're starting to see more short-term counts develop from these lows. So I know, you know, some people might be frustrated that it's, you know, the long game. One thing that I've really started to develop, you know, that I've been alluding to is getting, you know, money from time going by, you know, finding a way to join Theta Gang, you know, and, you know, just make money from time going by. So I don't really want to be betting on moves to happen in the short term. That being said, as I start to see some counts develop from this low that, you know, 1, 2, 3, 4, maybe we get 5 waves up and 3 waves back, I'll start to get into more shorter term, you know, counts from this low. Anyway, I think this is a wave 1 and a wave 2. And in the big picture, we can see Amazon go on a wave 3 up into the 220s. There, you know, I like both of these above these lows. I know a lot of people don't like, you know, oh, that's the low. If the low holds, we're going to make a new high. It's like, okay, duh, you know, but I do think I like the 78.6% fib in general for a wave 2 to be the stop. Now for, you know, stocks that have really high volatility, you know, really high betas, a lot of times that 78.6% stop gets clipped. And that's what I call bag holder risk, because really the only way to manage that risk is with smaller position sizes, but that's because the stock has higher volatility. So anyway, I think this is a wave 1 and a wave 2. It looks like we've got some wave 2 lows to trade against. I think we're going to see Amazon, Apple, basically the same stock, go up to the 220s for wave 3. Here is Nike, another one in consumer disco. 1, 2, 3, 4, 5 waves up. You know, not bragging or anything like that. I missed plenty of them, but I was able to predict this was going to be a 5th wave in progress. And the only reason that's important is because that gives evidence from an Elliott wave perspective that, yeah, hey, this is 5 waves up, and I know because I predicted the 5th wave. So if there's ever a time to, you know, say, hey, I was right or whatever, it's when someone's successfully predicted the move, and then they've proven, yeah, this is an impulse. and so that way it's easier to remember. It's an impulse, at the hard part. I think this is 1, 2, 3, 4, 5 waves up, 3 waves back at the 61.8% fib. The length of wave 1 places the wave 2 low is very similar to XLY, Starbucks, and Amazon, where we can see a big wave 3 take Nike beyond the wave 1 highs up into the lower 200s. So that's Nike. I think this 78.6% fib of 85 is a great level to be above. Here is Bank of America. I think this is 1, 2, 3, 4, 5 waves up. This is very similar to what I talked about with SPY. We're seeing so many of these like XLY already at the 61.8% fib. Basically every bank quite similar to this. I think it's 1, 2, 3, 4, 5 waves up, 3 waves back at the 61.8% fib, 24.93, a little wide, but I certainly think it holds. And we're going to see Bank of America go on a wave 3 up to that big round number of 60, possibly even higher in the future. So here's Nvidia. I think this is 1, 2, 3, 4, 5 waves up for Nvidia. And then this is a deep ABC correction. It's another one from the 2018 low, but it's slightly different. We'll talk about what Micron looks like, kind of a similar view, where the deep, I know this sounds like voodoo, furu nonsense, all right? And I get it. And realistically, anything that anyone says about the stock market, if I can't tell it to my broker, it might as well be furu, voodoo nonsense. I think the whole point of being a technical analyst is knowing, there's stuff that can be told to the broker and there's stuff that can't, right? Wave theory can't be told to the broker, but the options Greeks can. So that's why I think it's so important to get, some of the Greeks into the analysis as well. 1, 2, 3, 4, 5 waves up for Nvidia. Beautiful ABC correction where the length of wave A plays the wave B high. That dramatic, oh my gosh, right? And then Nancy Pelosi, she's the reason that we're having all these problems, right? It's not all the people who bought all these straddles and strangles on Nvidia, for the past, couple of months, right? Like they did here that helped me predict this rally. And again, it's not about, hey, I predicted this, because there's always going to be something I'm wrong about because the market rotates. I don't want to be right about everything at the same time, right? That means that I'm not very diversified. I don't want to be able to see, my account go up 30%, in 1 or 2 days. Like, that's not something to brag about. That's something to be like, oh crap. Like I have no risk management at all, if that's even possible. Here's Nvidia. I think this is wave 1 and wave 2. This deep ABC correction at the 61.8% fib. We're seeing straddles and strangles all over the bar chart, straddle and strangle screener, just like this area. All right. Past performance is not indicative of future results, but I don't think it's just Nancy Pelosi and Paul that are playing this move to the upside. I think we're seeing Nvidia go beyond the 340s in the big picture. 98 is quite wide. I think 115 is a little tighter, but we'll see this. I think we're going to see an impulse develop from this low for Nvidia, and I think SOXX and the Qs realistically, and Tesla as well, going to be the best gauge of risk to the downside for Nvidia. Here's Micron. I haven't talked about it for a little bit, so I'm going to put Micron instead of AMD. 1, 2, 3, 4, 5 waves up. For Micron, I think this is a 3 waves pullback where the length of wave A, place of wave B high is where wave C ends. Again, SOXX very important. A 78.6% fib of 43 for Micron's high beta is pretty wide. I think that the MMs are using straddles to manage risk, but I do think that even 43 being wide to the upside, there's still plenty of upside risk to compensate for that. I think this is wave 1 and wave 2 in the big picture. In the long term, we're going to see wave 3 take Micron to the 120s. What can happen down the road is that we have a shallow wave 4 correction and a wave 5 higher. So in the big picture, there's a lot of upside above 43 because the 120s is just the minimum wave 3 target. We could have a shallow wave 4 that retests the wave 1 high, and then wave 5 can be the length of wave 1, places the wave 4 low. And then in the big picture above 43, Micron can be heading up to the 160s. So that's Micron. Let's talk about some of these solar stocks. It's been, they talked about crypto winter. It's not crypto winter. We had the biggest hiatus for the clean energy sector. We had growth, get, pretty hit. And the clean energy sector has held up quite well. And then just recently this week, looks like we're getting what some would call a breakout. So let's just go over the wave theory. I think for First Solar, this is a wave 1 and a wave 2. This is another wave 1 and another wave 2. So I think this is a big wave 3 in progress. So remember, the Elliott waves are fractal in nature. This big wave 3 target is what's most important to me. So that means that this is wave 1 and wave 2, and this is a large wave 3 in black that's subdivided into 1, 2, 3, 4, 5 smaller waves in red. So I think this is wave 1 and wave 2. I do think we've ended wave 2 at the 61.8% fib. FSLR has entered wave 3. The length of wave 1 places the wave 2 low. It's going to take FSLR up into the 150s before a shallow wave 4 and a wave 5 higher. So the minimum wave 3 target is the 150s. Wave 3 in red could go all the way up to the 161.8% extension of 181 before a shallow wave 4 and a wave 5 higher. So there's kind of like levels to the target. 150 and 180 would be next. And in the big picture, I think FSLR can see the 200s. This is I know that sounds pretty, bombastic, but this is 10 years of sideways, in my opinion, accumulation. And what Kathy Wood said about Tesla, she's not looking too hot right now, but what she said about Tesla when she did make that prediction was that Tesla had a very similar multi-year sideways base, and she's on CNBC saying, the bigger the base, the bigger the breakout. I think there's a very similar phenomenon with FSLR. Classically, the Elliott wave standpoint kind of just labels the big base. I think this is 1, 2, 1, 2. We can enter wave 3 of wave 3, and I think we're seeing it right now for FSLR. So let's talk about Enphase enter. This is more important than FSLR. I know I don't get, all of them right, but when I was saying that I had predicted this wave 3 back in, October, it wasn't to say, hey, sign up for, my Discord. It was to say, hey, I've kind of helped prove that this is a impulsive structure from this low. And if I hadn't made that prediction, I wouldn't have been able to come out when we were right here and say, yeah, no, I do think that that's a wave 1 low that's going to hold. This is wave 1 and wave 2. And sometimes they just play chicken. Sometimes they play chicken with the wave 1 low. They played chicken. Sometimes the 78.6% fib, sometimes that doesn't cut it. So institutions use straddles to manage downside risk. I use straddles and position size to compensate for the growth beta that Enphase has. But look, they played chicken, right? Look how close they got. $2 or $3 away, right? So if I hadn't, said, hey, I've predicted this is a wave 3. So I've, proven that this is an impulse. I'm not sure I would have come out, when we were, French kissing this wave 1 low. Anyway, this wave 1 low did hold. And I think what's sometimes important is I see a lot of wave theorists, and I'm not here to critique anyone. I mean, there's plenty of, I don't really care what other people do, right? But, sometimes wave theorists, we're a competitive bunch, right? And what I see sometimes as wave theorists is you have to make them break the low. Make them prove it. I mean, but before we get into, the rest of Enphase, Tesla, last summer, it did the exact same thing. It was all over the bar chart, straddle and strangle screener. And look how close they got to this wave 1 low on the smaller degree, right? They came within pennies of it, and I saw a lot of people just, immediately act as if, they'd proven this is the ABC in progress and this low hadn't even broken yet, So I think sometimes there is value in just saying, hey, make them break the low. In football, they say if you hand it off to the running back and the running back gets 7 yards, 6 yards, you're not going to throw the ball the next play. You're going to hand the ball off to the running back again, and you're going to make them stop you. So I think wave theorists, make them stop you. Wave 1 and wave 2, and just playing chicken with that wave 1 low and taking that bag holder risk that wave 1 low could break leads to this it being another wave 1 and another wave 2. And now what I expected was that this was a wave 2 that ended at the 78.6% fib. And we were going to go to the 161.8% extension of wave 1. And look where this high was made. 287.5 0.38. And what do I have as the 161.8% extension? 287.48. So, the point isn't that wave theory always works. Is that when you see that the algorithms are using this, you have to acknowledge it. So what I expect is that this break above this high, first off, obviously, I don't really like the idea of chasing Enphase energy the day it's broken an all-time high. So, but what I'm going to say is I think any pullback that does occur in Enphase, and I just talked about with First Solar, I'll talk about with Tesla and NEO next, why I'm not really betting on pullbacks in clean energy. I think that in a lot of ways it's getting started. But for Enphase specifically, the classic sideways wave 4 bull flag often occurs for wave 4 before a fifth wave higher. But I think in the big picture, what matters for Enphase is that it's proven this is a wave 1 and a wave 2 from this low, and this is a large wave 3 in progress. So in the big picture, wave 3 is the 161.8% extension of wave 1. But even if there's a shallow wave 4 that retests the wave 1 high, wave 5 is usually at least the length of wave 1 placed at the wave 4 low. So a shortcut I'll do to find the wave 5 target in the big picture is within the same cycle, taking the length of wave 1 and placing it at the wave 1 high. So that can give a down the road target for Enphase energy that ultimately dips can be bought until the mid 400s. So I'm expecting that, we're going to see Enphase energy act as a huge leading indicator. I was going to do solar edge in the short term and next theory energy in the short term. I'll just post about those probably on Monday. But I know, I just wanted to cover Enphase energy. I'll talk about next theory energy and solar edge. I think they gave some interesting evidence for clean energy as well. Here's ICLN. I've gone over my straddles for ICLN ad nauseum. I haven't touched those yet, but I think this is a wave 1 and a wave 2 for ICLN, and I think this is another wave 1 and another wave 2. So just to get this is very similar to First Solar, the idea that, now maybe it's, there's never time to get, dollar sign eyes, but this could be wave 1 and wave 2 at the 61.8% fib. I like this wave 1 high of 14.27 not getting broken. It's pretty wide from here, but just like FSLR, this could be a wave 3 in progress. And I think that Enphase energy is kind of guiding and acting as a leading indicator right now. And maybe First Solar will be next. I'll be scouring the market for other clean energy stocks. I'll talk about Nova right now that also supports kind of the bigger picture view. So that's 42 for a wave 3 target for ICLN. For SunNova, this is another one that kind of has the bigger picture view, very much supported by First Solar, that this could be a 1, 2, 3, 4, 5 waves impulse to the upside, an ABC correction. Another one, length of wave A placed the wave B high is where wave C ends. So the length of wave 1 placed at the wave 2 low. I do think we hold 12.47. That's a little wide. A little tighter would be 16. But realistically, this is one that's extremely high, beta. But it's I think that this is also just to get the look of what can happen to clean energy, how big of a base breakout could occur, and kind of the multi-year cycles that this is a wave 1 and wave 2. SunNova, First Solar, ICLN, and Enphase energy, kind of giving different degrees of, how high this could go in the big picture. So for Nova, I think a wave 3 to 65 could develop. 12's a little tight, 16's a little tight, 12's a little wide for SunNova's high beta, but just wanted to throw that out there. Here's Tesla. We're starting to see, I think the Nasdaq's extremely important evidence for Tesla. But I think this is all a wave 1 and a wave 2. All that really matters for Tesla, for the purpose of this count, is just within the cycle from the March low. I believe if this March low holds of 539, which is pretty wide, quite tight, would be 620. I think that 539 still is the most meaningful invalidation. But probably a more realistic downside level is 620. Tesla's another one where most likely institutions are using straddles to hedge. But it's also another one where Tesla being on the straddle screener helped predict both of these rallies. Tesla and a lot of the some of the semiconductor stocks like Micron, but a lot of the airlines as well, exploding after the election. That's what introduced me to the bar chart, straddle, and strangle screener, and getting me into implied volatility. I think we're going to see all those readings again foreshadow. This is wave 1 and wave 2. This is a wave 3 in progress to about 1319. That's the minimum wave 3 target. So remember, that's the minimum wave 3 target is Tesla's in the 1300s. If Tesla gets into the 1300s, I'll update what the further wave 3 target is going to be. But what I'm trying to show is that even if Tesla blows past 1300 and has a shallow wave 4 that retests the wave 1 high above those levels I just went over, waves 1, 2, 3, 4, and 5, ultimately, if wave 4 retests the wave 1 high and wave 5 is the length of wave 1 places the wave 4 low above 539, to probably about 620, we can see Tesla go ultimately the length of wave 1 places the wave 4 low all the way up to 1900 in the big picture. So the next target is the 1300s, 1310, and further down the road, Tesla can go up to the 1900s. I think MMs are using straddles, but to the downside, I like 620 as a stop and 539 as an invalidation. I've talked a lot about how I think Lee has given a lot of evidence for NEO, and how I like the chart of NetEase a lot. I'm just going to focus on NEO in this video. I've talked about China a lot, but I think this is a huge wave 1 and an ABC wave 2 for NEO at the 78.6% fib. So I think the length of wave 1 places the wave 2 low. The only way to manage risk to the downside is with saying the wave 2 low is going to hold of 11.67. And then, the upside risk is quite substantial even at that. The length of wave 1 places the wave 2 low. Says maybe I will talk about Lee in this video, that we can see NEO go on a wave 3 up to 77 in the big picture. So it's a very recent IPO. I haven't updated Lee recently, but just to look at it, I do think we've gotten a little bit of evidence for NEO. From Lee Auto, because I think Lee breaking this wave 1 high was a pretty big deal. I also think that Enphase, not XPEV, breaking an all-time high is evidence for NEO as well, because they're both in QCLN. I think this is pretty substantial evidence for NEO as well, that Lee formed a wave 1 and a wave 2 at the 78.6% fib, and it's broken this wave 1 high. So I think it's going to go up to the 161.8% extension, and that's exactly the same way, which is 50. And remember, that's exactly the same way that I got this target for Enphase, was the 161.8% extension of wave 1. We're resting there right now. So, and also from the cycle for Enphase, wave 1 and wave 2, and this is the wave 3 that makes a new high. I usually use the weekly and the monthly RSI, but within the same cycle from the January low, wave 1, wave 2, wave 3, we get a new high with momentum, with a new high in momentum divergence. So that is suggesting, even if Enphase goes sideways, even if God forbid it pulls back and people get called a bag holder, that we will see another high for wave 5. So anyway, Enphase is evidence for NEO. I think Lee is evidence for NEO as well, going up to the 161.8% fib of 50. So there's not really a useful stop for Lee right now, but I just wanted to include it as evidence for NEO. UEC, very interesting. So I've kind of, secretly suspected that uranium was going to trade with clean energy, and now we kind of know why. That if I say one word about freaking fundamentals, then people just ignore all the wave theory, all the options analysis. But sometimes fundamentals are useful because the market will give you a correlation that an ETF isn't necessarily going to tell you. Right now, the disconnect from oil and, the market, to me, that's a big opportunity. But anyway, if you don't understand the fundamental, whatever reason that occurred, you're not going to be able to take advantage of the pair trading opportunities. Anyway, fundamentally, they kind of let us know two things. One is that uranium could trade with clean energy And we saw evidence of that this week with uranium being included in whatever bill they got Manchin trending on Twitter. But I think UBC, there's a lot of options activity on this one. I like uranium fuels a lot. I own uranium fuels. But I think that this is a wave 1 and a wave 2 from this low. And this is another wave 1 and another wave 2. The length of wave 1 places the wave 2 low can take UEC up to 7.20. So there's a fundamental reason, very interesting, that I just talked about clean energy. And there's a fundamental reason that uranium could move with clean energy, and I'm starting to wonder if it's evidence. I'm not going to get too carried away with that. It's just something I'm thinking about. Above 2.92, more meaningful invalidation is 2.34. We can see UEC go up to 7, but ultimately, even if wave 4 reaches the wave 1 high and wave 5 is the length of wave 1 places the wave 4 low, above those downside levels, UEC can head up to 10. So there's another sector. I should probably talk about platinum with this too, but there's another sector that I noticed the chart. This rally from the 2020 low almost lines up perfectly, ending in February of 2021, almost lines up perfectly with TAN and ICLN. So what I thought was really interesting, and I know it was just 1 or 2 days, when clean energy rallied recently on the news of that bill, there's a fundamental reason that silver and platinum are supposed to move with clean energy because they're used in photovoltaic cells. Okay, that's as much chemistry as I'm going to get into. But first, let me plug in my laptop. Anyway, there's a fundamental reason. All right, we're good. There's a fundamental reason that silver, platinum, and uranium are supposed to trade with clean energy. So I'm not saying they will, but I'm saying that the Elliott wave has kind of supported that. They each kind of, TAN and ICLN and silver and platinum. I'm not going to carry it away with this correlation, but they both formed a wave 1 from March of 2020 to February of 2021. And they both kind of had this lengthy wave 2 consolidation period. And I'm very interested to see, because I really like a lot of the setups in the metal miners, if we're going to see silver and uranium move with clean energy. So I think this is a wave 1 and a wave 2 above 14.52. I think SLV can head up to 33 for wave 3 before a shallow wave 4 and a wave 5 higher. So that'd be interesting. They told us that silver and gold, right, we were going to put them in our shoebox for Armageddon. It looks like it's actually kind of the secret ingredient for the solar utopia that we're all going to be living in. Man. Anyway, I think this is EPD. I wanted to include it. I know I've been a little heavy on the energy infrastructure recently, but that's because I'm seeing it in the options market. Anyway, I think this is a wave 1 and wave 2. Wait, didn't they tell us that oil can't move with the stock market? I said, don't get carried away with that because, by the time everyone's caught onto that trend, all of a sudden, oops. But I think this is a wave 1 and a wave 2 for EPD. More importantly, I think this is another wave 1 and another wave 2. I do expect we're going to hold this low of 20.42. And this is a large wave 3 in progress. From this low, this is a wave 1 and a wave 2 that ended the 61.8% fib. So the length of wave 1 places the wave 2 low, gives a wave 3 target of 31 before a shallow wave 4 and a wave 5 higher. All in all, waves 1, 2, 3, 4, and 5 can take EPD up to 37. Here's Delta Airlines in the big picture. I'll start going through these a little quicker. I think this is a 1, 2, 3, 4, 5 wave 1 for Delta Airlines and a wave 2. From this low, I think we're going to hold 24.95, a little tighter, and go on a wave 1, wave 2, wave 3 up to 60 before a shallow wave 4 and a wave 5 higher. All in all, we can see Delta Airlines head up to the 60s and eventually the 80s. Above 24, 24.95, a little tighter. That looks good. Here's Royal Caribbean, another one that I didn't have ready. But here is Royal Caribbean, a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. So sometimes the most grandiose bull counts, have the most dramatic corrections. And I think that we will see some poetic justice in the travel sector, that this deep correction is building energy for an explosive impulse. I think this is all a wave 1 and a wave 2. From this low, I think this is another wave 1, another wave 2. 19.25 is pretty damn wide. 22 is even pretty damn wide. But I think that this is the upside can compensate for that. That this is a wave 1 and a wave 2. The length of wave 1 places the wave 2 low. Can take Royal Caribbean up to 112 before a shallow wave 4 and a wave 5 higher. Ultimately, if we see this wave 1 high get broken, what we're probably going to see is that we're going to see this wave 1 high get broken as well. So that's RCL. Here's Twitter. Evidence for Snapchat. I know Snapchat has gotten hit, but just in the big picture, this is a wave 1 and a wave 2 on the all-time chart. And then zooming into the past 3 years, 1, 2, 3, 4, 5 waves from the 2020 low, ABC correction at the 78.6% fib. I think this is another wave 1 and another wave 2 above 28. I think we're going to see Twitter enter wave 3 of wave 3. We can see it up in the 60s next, but the big picture target is the length of wave 1 places the wave 2 low. That can take Twitter up into 90 before a shallow wave 4 and a wave 5 higher. So here's Snapchat. Snapchat's gotten pretty hit. It's getting very close to this wave 1 low of 4.82. So I saw the institutions were using straddles on Snapchat in this range to manage risk to the downside. We've gone past the 78.6% fib, but right now we are at somewhat of an opportunity where we're retesting this wave 1 low from 2018. And the ultimate wave 1 invalidation is the wave 1 low. If this is wave 1 and wave 2, to me, the biggest evidence for Snapchat is that this rally is clearly subdivided into 1, 2, 3, 4, 5 waves. So I've talked about a lot of social media stocks. I included SOCL in one of my top ETF videos recently, and then Snapchat got obliterated. But I think this is a wave 1 and a wave 2 above 4.82, which is pretty wide. This is a wave 1 and a wave 2, and we can enter wave 3 for Snapchat, and that can take Snapchat beyond this wave 1 high. Even just getting to the wave 1 high is pretty substantial, taking Snap all the way up to 86. Now, I know this sounds crazy, but sometimes stocks do really volatile things. And sometimes that volatility resolves to the upside. And we're going to have a similar conversation with Roku. But what can happen above 4.82? Well, what can happen is that Snapchat one day breaks this wave 1 high of 83 and confirms it's within a huge wave 3. So wave 3 usually goes well beyond the wave 1 high. And even if it's followed by a shallow wave 4 that retests the wave 1 high, wave 5 is often the length of wave 1 placed at the wave 4 low. So I know this sounds crazy, right? I talked about Virgin Galactic in one of my videos recently. I'll talk about Roku and Novavax and crypto, but there are kind of some moon boy looks in growth. And I think Snapchat, in the big picture, it's a pretty dramatic correction. And it could be building up energy for pretty monstrous upside. They made monster beverage bulls hold through, 2 or 3 85-80% corrections just to hold Monster beverage. That's not even the biggest winner. And if you look at the chart of, Amazon and Bitcoin and Nvidia, I'm not saying that Snapchat is anything close to any of those, but a big growth winner does this a lot. And in the big picture, I think we're seeing a lot of names, Snapchat possibly being one of them, but eCash, e-commerce, some of the Chinese growth stocks, a lot of these small cap clean energy, some crypto related names. There are kind of these ridiculous ideas to the upside. For Snap, if it's about defining risk, that's the wave 1 low of 4.82. Above it, a wave 3 to 87 can occur. Now, that's just saying that Snap can hold a low and go make a new high. But from a wave 3 perspective, what can really happen if in the big picture Snap's above 83? It can have a shallow wave 4 that retests the wave 1 high before wave 5 that's the length of wave 1 placed at the wave 4 low. And in the big picture, we could see Snapchat in the mid hundreds. Now, I know that sounds crazy, but growth people are going to have to get used to crazy, because there's a lot of crazy in growth right now. Virgin Galactic, it's ridiculous. I get it. But I think this is an ABC correction where the length of wave A places the wave B high is where wave C is ending for space. And we can see space go to space. There's a lot of ridiculous ideas in growth. Nano dimension, it's goofy. I get it. But I think that this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. I don't think any of these will be easy. Probably some of the the toughest, stocks. But I think we're going to see some ridiculous growth counts play out. And I think we're getting possibly a clue or maybe a leading indicator from clean energy right now, not to get too carried away with Enphase energy making a new all-time high, that can occur, to other sectors in growth, not just clean energy. So Nano Dimension's another one where I think this is a wave 1 and a wave 2. And all I'm trying to show is that there are ridiculous ideas in growth right now. That's kind of how the market goes. You go from being the GOAT, that everyone's making fun of, right? Not the Tom Brady GOAT, but the GOAT like the kicker who just missed the big kick, and then you go from being that GOAT to the Tom Brady type of GOAT. And if you look at Roku right now, we can see on Roku's chart, it's already had a wave 1 and a wave 2 where it went from 176 to 58. We've already seen what happens when Roku loses 70% of its value. The energy that can be, built up from a move like that. And I think what we can see is that this was a 1, 2, 3, 4, 5 waves impulse for Roku. I did predict wave 3, and I thought wave 5 was going to be a little more than just a new marginal new high. But I do expect this is clearly 1, 2, 3, 4, 5 waves for Roku, and kind of similar to Snap, kind of similar to Space, kind of similar to Novavax, kind of similar to SE, kind of similar to a lot of growth related names. There's some ridiculous wave 3 opportunities. I think this is 1, 2, 3, 4, 5 waves for Roku. The length of wave 1 places the wave 2 low. 26 is extremely wide. That's not really a useful stop, but that would be the ultimate invalidation to say that a wave 1 had developed from this low that occurred in 2018. And in the big picture, Roku could go on a wave 3 into the 500s. But even if it had a shallow wave 4 that retested the wave 1 high, and remember that the wave 3 is usually further than the length of wave 1 places the wave 2 low. But even if wave 4 retests the wave 1 high, wave 5 could be the length of wave 1 places the wave 4 low. And we could see in the big picture, Roku go up into the 900s. Now, it would most likely have a stock split by then. I know Roku's pretty ridiculous. I know 950 sounds pretty ridiculous. So remember, there are stock splits. But I think that there's a lot of growth stocks that kind of have this similar idea where we've had this really dramatic correction. We can see a really dramatic rally. I had 58 as a stop for Roku. We're pretty close to that. 26 is a pretty wide invalidation. What some will say is wait for a wave 1 to develop to buy against the wave 2 low. For me, I like to kind of acknowledge the higher beta, higher risk in growth with position sizing up front. So anyway, that's Roku. I think there's a lot of growth stocks that have, kind of this similar message to the upside. And I think we're seeing, one by one, that clean energy might be the first growth sector to really start to see some of those play out. So here is Novavax in biotech, 1, 2, 3, 4, 5 ways to the upside. An ABC correction where the length of wave A placed the wave B high is where wave C ends. I know people are thinking, what on earth does Novavax have to do with, any of those other growth stocks? To me, it's all about, the growth sector. I know it sounds like, well, Novavax has its own, fundamentals, and it does, right? Novavax does have its own fundamentals. I think biotech is another growth sector that we're going to see over time is going to move with, growth as a whole, even though biotech has its own fundamentals. Anyway, I think this is wave 1 and wave 2. I actually do expect that Novavax will hold 34. It's extremely volatile, so, but I do think that wave 2 low is going to hold. We're going to see Novavax go on a wave 3 up into the 360s. I know that sounds, ridiculous, but in the big picture, that's just the length of wave 1 places the wave 2 low. So I think there's pretty phenomenal risk reward above 34. And that's only really the meaningful level to the downside. So let's get into crypto. I think that the most important chart to start with is Ethereum. Just because it's the one that went up, no. I think that this is a 1, 2, 3, 4, 5 waves impulse. Now, I actually had that wave 1 and wave 2 drawn before, and I'm going to delete that now. But I think that Ethereum is a 1, 2, 3, 4, 5 waves impulse. The reason I want to start with it is because it's reached the length of this wave A, places this wave B high, being where wave C ended, and it looks like it's at the 78.6% fib. So I know 883 is just saying, well, if that low holds, we can go make, a new high above 4,800. And yes, that's, the wave theory expectation right now. But what can it do beyond that? Well, beyond that, if this is all wave 1, wave 3 is at least the length of wave 1, places the wave 2 low, that can take Ethereum up into the 5,000 in the big picture, 5,600. But what wave 3 can also do is it can be followed by a shallow wave 4 that retests the wave 1 high, and then wave 5 can be the length of wave 1 placed at the wave 4 low. So in the big picture, this really deep ABC correction can not only be building energy for the 5,000s, it could be building energy for the 9,000. So that's where, even though 883 is pretty wide, even though it's just, saying, hey, if that low holds, it's not just that the wave 1 high could break. Ultimately, Ethereum above that low could be in the 5,000s. It could be in the 9,000s. And that's really the most useful low in crypto right now. I've scoured, I was going to talk about bit farms, but I really think that that's the most useful low for crypto. But I think that Bitcoin, the 78.6% fib of 14,840 is pretty useful from a fib standpoint. Bitcoin's another one. It's not to brag, but I did predict this wave 3 would occur, and I did predict a new high. So I was wrong that this was going to be, the start of a rally to 100,000. Not quite that path. I predicted up to the 20,000s and 30,000s. Then I predicted up to, the 50,000s and the 60,000s. And I thought we were going to keep pushing up to 80,000 and 100,000. We broke this low. Okay. Anyway, the point isn't, how right and wrong, I am. If the market rallies, it's kind of ridiculous to say, oh, I have a 100% hit rate, right? Obviously, if the market rallies, then all the stocks that I talk about are going to be winners, right? That doesn't mean I have a 100% hit rate. That's kind of ridiculous. It's all about over time, how consistent are you? But what's more important is to have risk managed completely to where it's not about being right and wrong. It's, kind of more about the directionless side of the market, theta and, gamma and beta and correlation coefficients, all that fun stuff that's coming to this channel. But I think this is a 1, 2, 3, 4, 5 waves impulse up for Bitcoin, an ABC correction. I think Ethereum above that wave 2 lows, very nice. The 78.6% fib of 14,840 is good for Bitcoin as well. The length of wave 1 places the wave 2 low can take Bitcoin up to 83,000. Just like Ethereum, it can go beyond that. But we'll talk about that when it gets there. All right, now I'm going to be that guy, right? Oh, Ethereum Classic, it had this crazy move, bro. So now I'm going to talk about it on my YouTube channel. I just think Ethereum Classic gives a little interesting view, maybe a little inspiration for crypto bulls. Not that they need it, but I think, not that I need it. All right, I bought Litecoin at like, 229. Anyway, I like to brag about that. Brag about the losers. That's the new movement. Brag about the losers. Because if you're bragging about the losers, then I don't really think you have to hide, you're not hiding winners, right? So if you brag about the losers, I'm going to think you have a lot of winners that you're not showing me. if you brag about the winners, I'm going to think you have a lot of losers that you're not showing me. So the new wave, right, the new kind of avant-garde, if you will, is bragging about the losers. So I'm going to start doing that. Bragging about the winners, that's the old way. Anyway, Ethereum Classic, a little inspiration for crypto bulls. And I know this video is getting long as hell, so I'll make sure to have subtitles, but I think that, or not subtitles, timestamps. Wave 1, Wave 2. If I take the beginning of Wave 1 with the Andrews pitchfork connected with this high and this low, then if this Wave 2 low holds, which is super wide of 14, what I'm expecting is that the minimum Wave 3 expectation is that we're going to see the median of this Andrews pitchfork hit. So if crypto does get running, if crypto goes to crazy town, Ethereum Classic getting to the median of this pitchfork could be a very useful thing to take note of in the future. There would probably be a reaction there. There could be a chance that Ethereum Classic is going up to the upper bound of this pitchfork. All right, now I'm just getting ridiculous. All right, that's fair, right? But there's a couple of altcoins that look a little ridiculous. And, kind of the thing with crypto is it does the ridiculous thing. I think that Ripple is another one with a pitchfork that is very uncanny. Let me just go point out, look at this beautiful reaction on this weekly pitchfork right there. That's what I'm looking for when I connect the beginning of Wave 1 with the high of Wave 1 and the low of Wave 2. That, it's some kind of part of Wave A, B, and C. I'm seeing some really uncanny reactions on the median. I like that one a lot. And I think this is letting us know if we hold above 14, the minimum expectation for Wave 3 is we go to the median. I know it sounds like voodoo now, but we'll see how long that lasts. Ripple, another one with a voodoo pitchfork, Wave 1 and Wave 2. And I think Ripple forms another. Look at this beautiful reaction on the median. And then before, I've already used this median, the same pitchfork at work, because when Ripple formed this kind of small little Wave 1 and Wave 2 from this low, I saw this reaction on the lower bound, and I was like, we've got ourselves a pitchfork here, and that helped me, predict this 600% rally. I thought that Ripple, might just be going off to the races, towards the median of the real pitchfork. It looks like it had to tag the lower bound first, but in the big picture, I think that Ripple has formed a Wave 1 and a Wave 2. This is another Wave 1 and another Wave 2. Ripple can go back to the lower bound. On the weekly chart is what I'd be looking at, the lower bound of the weekly chart. But it can go back to the lower bound. In the 161.8% extension of Wave 1 is 3.07 before a shallow Wave 4 and a Wave 5 higher. But ultimately, I do expect, and this is where managing risk with position size is, a useful habit I have, because with crypto, if someone says they're using a 5% or a 10% trailing stop with crypto, right? I mean, they got an igloo to sell you in AZ, but I think we're going to see in the big picture one day that Ripple goes all the way to the median of this Andrews pitchfork. Anyway, that's Ripple. I know it's kind of the goofy crypto, right? But XRP community, the XRP community is my family. They really are. I'm just kidding. I don't know anyone in XRP community, but cool hashtag. Here is Solana, another one. It looks ridiculous, but this is crypto, and I think this is in the evidence category. A clear 1, 2, 3, 4, 5 waves up. Now this deep, scary ABC correction. We even have a couple crypto brokers go down. Oh no! But we can see a Wave 3 begin for Solana. This Wave 2 low on the smaller degree is 19, right? So another one where position size would be quite useful, or probably more useful than a stop realistically. So that's why for high growth, high beta, I manage risk with smaller positions than value stocks in, kind of the dividend sector. But what could happen to Solana? What's the crazy thing that could happen to Solana, right? The ridiculous thing that could happen to Solana is that it begins Wave 3. which is above the wave 1 high, and then it's followed by a shallow wave 4 that retests the wave 1 high before a wave 5 that is the length of wave 1 placed at the wave 4 low. So above 19, but realistically, I'm managing risk in the altcoins with smaller positions. The length of wave 1 placed at the wave 4 low could one day give a wave 5 target of 500 for Solana. So extremely volatile asset classes. I think we're going to see a lot of this volatility resolve to the upside.